There's a particular kind of heartbreak in real estate. You find the cheapest house on the block, and it turns out the block was trying to warn you. Verenetta Johnson has thoughts on that.
She does. Today we're covering two connected ideas: why bargain-priced homes can quietly become the most expensive purchase a family ever makes, and how zero-down financing programs are actually helping buyers get into the right homes. Let's start with the hidden costs behind that low listing price.
The central tension here is a familiar one. A low listing price feels like a win, but the Post argues that purchase price is just one number in a much longer equation that most buyers aren't running.
The Post frames it directly. The cheapest house can sometimes become the most expensive purchase a family ever makes once hidden repairs, financing issues, taxes, insurance, maintenance, and long-term ownership expenses begin to accumulate.
So the sticker price is basically just the opening bid in a negotiation with the house itself. And the house always has more line items.
Foundation movement, roof replacement, aging HVAC systems, outdated electrical. The Post walks through each category. An Alabama summer alone puts serious strain on HVAC equipment, and replacing an aging system is rarely cheap. These aren't hypothetical risks. They're the costs that surface after closing.
And the Post makes a sharp point about cosmetic work masking structural problems. Fresh paint, new flooring, updated countertops, none of those fix what's underneath.
Right. The Post also connects property condition directly to financing eligibility. FHA loans, for instance, include minimum property standards. A bargain home requiring significant repairs may not qualify until that corrective work is completed first. USDA zero-down programs carry similar requirements.
So the loan program you were counting on can become unavailable because of the very condition that made the house cheap.
That's the upshot. The Post ties this to a broader principle. Understanding FHA loans, USDA loans, and smart home buying means recognizing that lenders evaluate the property, not just the borrower. Location factors, HOA fees, and future tax assessments round out the picture.
Now, if the cheapest house carries all those hidden costs, the obvious next question is whether there's a path to a better home without a massive down payment. The flip side of avoiding the wrong cheap house is actually getting into the right home. And the barrier most families cite isn't qualifying for a mortgage, it's coming up with the down payment at all.
The Post on zero-down purchasing in 2026 addresses that directly. Many buyers are successfully purchasing homes with little or even no money down by using government-backed loan programs, down payment assistance initiatives, and financing options designed for qualified borrowers.
So the assumption that you need tens of thousands saved before you can even start looking, that assumption is doing real damage to people's timelines.
It is. VA loans remain one of the strongest options for eligible service members and veterans. USDA loans cover qualifying rural and suburban areas around Huntsville, and the Post notes that buyers are often surprised which communities still qualify. Down payment assistance programs add another layer, sometimes as grants that require no repayment if eligibility conditions are met.
The Post is careful to say zero down doesn't mean zero preparation, though.
That's a key distinction. Lenders still evaluate income stability, credit history, and debt-to-income ratios. The Post emphasizes that buyers who organize financial documents, review credit reports, and get pre-approved before shopping are far better positioned, especially in competitive situations where sellers favor offers that are likely to close. Credit improvement also gets its own section. Consistent bill payment, reducing balances, and checking reports for errors can meaningfully expand financing options within just a few months.
Which connects back to the earlier segment. Knowing your financing options shapes which homes are actually available to you, not just which ones you can afford on paper.
Both of these ideas point toward the same thing. The buyers who come out ahead are the ones who look at the full picture before they fall in love with a number.
Whether that number is the listing price or the down payment. Next time, we'll see what else is taking shape in North Alabama.